So today's lesson is not going to take time, the live trading session. In as much as you know that we come here to look for trades to trade live, I also love to explain the reasons why I am seeing some things in some certain ways so that you don't just follow directly what I'm saying without understanding the thought process I'm coming from. So I believe that is most important and just to give you, okay, sorry about that, than to just give you you buy here, you sell here at this point. So this is the dollar index. If you have been following our analysis before now, I was looking at this to go short as of last week and to take out this low. So we have already experienced that in the marketplace. So ever since we started to be trading live, I've been calling these shorts, and I gave you a particular point to look at for that. If that point is not being invalidated, we are going and we are reaching upward to this high. So we saw that met and we are running down for the sell side for the dollar index. Now, price action is very, very sweet if you track it and you're following all what I've been teaching. So if you look now on the monthly time frame, we have come to a fair value gap. We have almost closed the fair value gap as to that side. Even if we are short as of this, I told you that whether you are buying or you're selling or the market is in a bullish or bearish institutional order flow, at some certain point, the market will meet some speed bumps, what I call speed bumps. As it's coming and is hunting down the supports, it wants to break down support because the order flow is bearish. So it wants to break down support and create new form of resistances in the marketplace. It's going to attack them one by one in form of arrays. That's why we have our PD arrays, our premium discount arrays. So in the PD array matrix, it's going to be hunting for the lower side of the range of the matrix. It's going to be hunting for them and it's hunting them one by one. If you look now, as the market was coming down, if you look down here, you will see a little bit of this thing here. You see old low, first of all. You're marking out all these lows. There was no fair value gap. So after this low, you meet a bullish order block. Now, this bullish order block is not to tell you that you should start buying as of this point, to tell you that you should look for it as a TP objective when you are going short. That's why this candle closed inside this order block. And this one went to take up for more sell side imbalance, buy side inefficiency to be able to break this order block to the downside. So when I'm even doing my studies, I can be on one time frame and I will be learning from that time frame. I don't need to be switching between time frames and time frames upon that, because as you are going on in your development, you will gain mastery towards that. So as of this, it broke the order block. Now we have met a new array that is old low and fair value gap, and it dipped into it. What do you expect now? This is a long-term objective. If you go to the lower time frames, it dipped into it and went up again. It gained the liquidity above this high and started going short to make on that lower low. This is on that sell side imbalance, buy side inefficiency, and we traded down. Now, as at this point, I pointed your eyes to that we have formed a swing high, a higher high to the middle, and two lower ones to the side. So I know to see that high being violated, and we sold down short. So it's very, very simplistic when you're looking at things from this angle. Stand. So I want to be able to go down to the lower time frames to tell you what we are expecting as of this week. So let me bring all my markers here in this time frame so that you see that. So if you see now, don't mind all these things I'm writing here. This is what I marked. Sorry about this. The the high, the fair value gap high, if you look at a 3-month time frame, it's also a bullish order block. This 1, 2, 3. This is the order block from here. This is where the order block started. So it's going to have a significant effect. Look at it here. From the high to this place is inside the order block. So on the 3 months, so let's go down to the weekly. On the weekly time frame, now watch now. On the weekly time frame, we had a low. We had another low here. This is fair value gap. That was why I was pointing your eyes to this point in the Telegram and on the WhatsApp group, because price action, there's something about this market I've observed all over the years. It does not really depend on what you have learned, but the application of it matters, and how you have seen that in played out in the past. I cannot stress it enough. So how you have seen that in play out in the past, because the moment you begin to look at something from a biased point of view, the market is going to drain your eyes to that particular point. Let me say you are on a 1 hour time frame and you had a longer term objective, but just because of what you are seeing on the short-term time frame, and you want that thing to manifest, even when you know that within you it's not going in it's not going symmetrically to your longer term analysis, you want to force that thing to happen. And the market, because of you are trading on a short term, you want to get trade now. You want to be able to trade that thing now, and your eyes and your focus will be drained to just that single thing, and you forget about the big picture. So it's very, very easy to derail off your path if you're not sticking to all these things as I'm pointing out to you like this. Not minding that I myself, I can even scrap out some things in the short time frame, because I know, I understand quest for liquidity, imbalance, and all the rest. But I just want things to play out and my analysis to be going in that direction for me. I don't want, when I am looking at this thing like this and the market forces me to change and I begin to go on like that. I don't want that kind of a scenario. So I'm looking at this fair value gap and into this bullish order block here on this time frame. If you look here, that you're going to observe, we had a consolidation time, a consolidation here, and this candle before the up move. So this is what I'm referring to, the order block. So this time frame is very, very important in you determining your bias and your institutional order flow. Yes, we are bearish. Yes, we are bearish. There's no doubt about that. But as to which point are we going to reach out for the liquidity below these lows down here before we gain the form of fair value to start trading up as a retracement? I believe everyone really understands what I'm saying. So I'm looking at this low for them to come and raid before I start trading this down. So this is my first confluence. My second confluence is that like I always tell you, in higher time frame like this, you expect most of the time one part of the previous higher time frame candle to be rated on this time frame, the monthly, the weekly, and the daily. So look at this candle. It rated the low. This rated the high and the low, and we call it our end of manipulation candle, EOMC. But this rated the low. This candle rated the previous candle's low. This candle was in between the range. This candle rated the previous candle's low. This the low. This the low. At the point that they rated the high and the low, you can expect an end of manipulation if it goes symmetrically to your analysis. Like here too, we read the high and read the low, and this candle exploded down to the downside. So on this candle now, you know that this week that we are in now, you know, there are points that you can tell yourself that it is impossible for the market to do this. So it is impossible for the market to come and take out this high. You know that one as of this week. It's not possible. So I expect that the market should take out the previous candle's low. I expect that it should take out the previous candle's low here. So take out the previous candle's low, the previous week's low, and into this daily fair value gap, into the weekly fair value gap, sorry about that. Then we can start hunting to close this liquidity void that have been created in the marketplace, and we'll still protect our highs on this time frame here before going down short again to take out all these lows here. So that's what I'm seeing on this time frame. Like if you watch now, look at how I put it here. So this was the 3 months order block and the 3 months fair value gap. And this is the weekly OB. So if you watch now, I put 3 months and 1 month and 1 week OB and 3 months this thing OB2. So now I kept this note here even before I entered this week, because I don't want to be coming to my chart every day and I'm confused. I want everything to be clear for me. So I put here that this new week, take note, only one part of the previous week candle will be rated, more probably the low. So you are trading the retracement of the new weekly candle into the body of the previous week to close up the void. So that's just what I explained here now. So that's what I explained. Then now let's go to the daily time frame. So despite what all this is doing, we have been seeing contraction candles since, and we expect a large range candle. And this is what I'm looking at, the validations of the long that have been initiated. So all this that have been happening here, it really does not interest me that have we started buying and have we forfeited this low or this point of liquidity now to the downside. So I'm really not looking at that. So before this week even started, I pointed here to be my low of the week. So this is the range I'm looking for, the low of the week before the week even started. But for now, like you know, I'm looking at the reading of this particular low here, low resistance liquidity run. So we went up into here. I'm not being moved by that. I know that this is a consolidation point, and this can be seen as manipulation. That's why we have our AMD setup: accumulation, manipulation, and distribution. This is A, then this is M, then this is D: accumulation, manipulation, and distribution. So so for now, what I'm just saying is that I don't want you to get into the trap that the market makers are setting, or this is what they normally do. So even if this consolidates like this throughout this week, I want you to look out for this to be raided before you come in, and that's when your edge have kicked in. Otherwise, if this expands to this now, this high here now, you can now say that, okay, we are now going long to cover up the liquidity void that have been created. Otherwise, I just want you to remain dialed in and waiting for this to happen. But near term, as of now, I am trading the CAD JPY. I'm focusing on the CAD JPY. So let's look at Euro 2 sometime. So you see now, Euro also did this. So this is the liquidity void here. So I'm still waiting to see another reading before I look to go short. So all these are contraction candles. So if we take out, we have taken out the previous daily's low. If we take our previous daily high today, we have news coming in the afternoon by 1, I think so. So if we take out the previous daily's high on the euro, then I can now say that we have formed. So 1:30 we have news on USD. So if we take out the previous daily's high here, then I can now say that an end of manipulation candle have been formed. And on Thursday, I can now go in to be trading these shorts to cover up this liquidity void here that have been created. So that's what I want you to do, because we are at a premium now, but based on the fact that you are not large traders, we are short-term traders, we don't want to be able to place a sell here and put our stop loss, something like this, something like here or something, no. So we don't have that kind of money. So I'm waiting for me to see that they have done that reading, then I capitalize on the reversal that will come in here back into this range. So a quick added tip on liquidity void is that just as we see our consequent encroachment on our fair value gaps, you can also measure the liquidity void and look at 50% of that void to be closed in when you're expecting a retracement. So that's just an added bonus for you for today. So if you see a liquidity void, the market have spilled up to the upside or the downside, you can look at 50% of that range to be able to look for your retracement when it's coming back. So the GBP. So look at the GBP now. Look at the GBP. I drafted out the previous weekly candle, and we are already half of that range. Look at it. We're already half of that range for the GBP. But I don't want to go into this, not minding the fact that I've seen some confluences like here. If you put your fib here, you're going to know that this is 2 times of our take profit objective, and we expect that the market should retrace out from that point. But I want to wait for the dollar to do that before I engage on all these things. This is a monthly fair value gap. So if when the dollar is doing that, when the dollar is doing that, I see something like this, I'll be at peace to start trading it down. So what I'm focusing on currently is the CAR JPY. This is what I am focusing on now currently. This is the active trade that we can look to take as of today. So if you look at the CAR JPY, I gave this point as my invalidation here, and the market just went to that point, but it did not break it. So the reason for me giving this point as my invalidation, because of I was capitalizing on this fair value gap to be the support. I will look to now take out this high here. So I wanted the market to come in here and start buying up here to take out this high. But if you look now, the candles, they are closing above the fair value gap. That means the fair value gap is the support that is pushing it up. Anything that you look as a wick coming down, those are just retail delivery. On an institutional level, they focus on the bodies of the candles, So that's so on an institutional level, they focus on the bodies of the candles. Let me just give you an example here. So you see, they are trying to push price upwards here, and this fair value gap was what they went to capitalize to push it up. Fair value gap, even here, the bullish order block. Look at all the bodies of the candles. They closed above this point. We are closing here, closing up. So it was telling you that we are rejecting price from coming down, but retailers will still look at that since the wicks are pouring down here, maybe they want to do something. No, they are just protecting their long position. They have been buying up from this point. So it was the same concept I used to be able to call this. So as of this point, I wanted this fair value gap to respect price. So this low will have to be my invalidation. This low will have to be my invalidation. So that's why I put it there. I put this low as my invalidation, and this box or the close or the fair value gap to the low at the point I want to see the low of the week. Now, the same thing we said for the dollar again. I expect at least one part of the previous candle to be raided. So I call the low to be raided too. And this week, we can even look at the high being raided. That's what I want to point out now, because I want the market to go and spill towards going to the upside with a high degree of strength. So I want to see that the market is going upwards into this point. So this is where I'm looking at the maximum reach as of this week, the maximum reach this candle can get to. I'm looking at this point. So on the daily time frame, we saw that, watch now, this is the weekly fair value gap and daily order block. Look at how the order block now on this candle, it was pushing price to the upside. Watch now, the bodies of the candle, the wicks entered into here, but the invalidation was not being breached. Let's observe that. The low of this candle came out at 104.246. The low of this candle came out at 104.246 again. So it tells me that not minding that they are equal lows, they will be used as point of low resistance liquidity run when the market is coming down. But for now, I expect this place to be met. So like I said, for here, the highest point we can look to trade this up is that weekly high. But on the daily time frame, this is it. So I don't want to push my objective more. I want time to be able to align with this price here. So if I see that there are news coming in, like we have card news now on Friday. So if I see news coming in, I want to be able to align it with what has the time of the day or the day of the week done to be able to reach for my maximum TP objective. So that's why I've been trading this up. So what can you look to enter this? So we are going to do SMS. We are going to do SMS. Yesterday, I started trading this here. As at this point, this is where I entered. So this was yesterday's opening price at 5 o'clock. And this was Asian range high. Look at it here. I put it here. This was opening price and Asian range high. We know that if this is the opening price of the day and we expect a bullish day, the market should open at the opening price and begin to buy up, or open and make a manipulation down and begin to buy up. You can also see one thing that most persons don't also know is that the market can also do something like this. This is the opening price. The market can also do something like this. It can open for the day. It can go up, come down, and still go up like this again. So this you might see on a short-term level. I'm teaching so many things here at one stretch. I'm sorry for that. But this, you can see this at a short-term level, but on a higher time frame candle, it will just come as opening, low, and high. But all these manipulations we are done in the short time frame. So that is why I was able to see this as this was the opening price. If we have made this level of manipulation to the downside, then I should expect we made a reversal as at New York Open. So New York Open kill zone. So as I saw this, it tells me that my trade I placed here, it has been confirmed. Stand. So I can move my stop loss up or whatsoever. So this was the opening price. This was the Asian range high and also the London high. So we bought up and we capitalized on this, and we are buying up ever since. So this is what I want you to be able to look out for as of today to trade the CAD JPY. That's what I want you to look out for to trade. CAD JPY. So you should be looking out for retracements on this 4-hour level. So since we are reaching up for more upsides for this, this is okay. This is Asian low. So Asian low is to London session rather is to make the low of the day. Now this is Asian low. So if it retraces up onto these points, come. Yeah. Let's look at the JPY index to give us more clarity, because we want to look out for the retracement so that we can go long on the CAD JPY for those that did not enter on time for that pair. So watch now. This, despite that we saw the rejection block being used for this particular system, the bodies of the candle closed below the bearish order block here. So it's also very important. So this is our low resistance liquidity run. So 1, 2, 3, 4 is one bearish order block. So this is how I look out for things. Here is your mean threshold. Not seeing any favorable gap this side. Yeah. They already reached us. Okay, so I love to give safe objectives. So if we go into here for this Shanghai, which I don't really think, because it want to spill down quickly to the downside. This would have been the trade. This here, right here, would have been the trade. The bearish order block and the sell downward. This fair value gap is too high for a premium part to look out for. So what I want you to do, for those that are already buying this, you can look to continue buying that. But for those that have not entered for the CAD JPY, if the market gets to anywhere around here, you can look to continue your buys from here in threshold. You can look to continue your buys. If it comes down here and capitalize, you can look to continue your buys. You put your stop loss at this low here. Then you look to hunt the upside. The reason why I use this range because of this candle made the institutional price swing point on this level. So that's what I'm looking out for now. So you can look to enter this when the market gets to this point on the CAD JPY. So I believe I've also posted the Euro GBP. The reason why we saw that the GBP, the reason why we saw it selling. So even if I'm not trading this, I'm also tracking it to ensure that everything goes in line for me. So as at Monday, we made the low of the week. I've taught you that when the market just opens and it begins to buy, you can look at it as the low of the week. Market just opened and begins to buy, came and capitalized on it, bullish order block, and it's bought up, made a higher high, then came again, it still capitalized off of that same bullish order block here, and we saw the market going up. So that's what I'm experiencing for Euro GBP. If Euro GBP is bullish, you expect that Euro issue buy and the GBP issue consolidate, or Euro issue consolidate and GBP issue fall. So it was bullish. We saw the GBP sold down, and the Euro, what was it doing at that point? It was consolidating. So that's just how you are able to track that. So for now, we are looking at the CAD JPY, able to trade here, and We are also looking at wow. And we are also looking at the dollar index. We are tracking this. Any day it makes the run for these lows, be it a consolidation to the reversal or anything it gives us. Any day it makes the run for these lows, we want to look at it forming the low of the week. And another confirmation as it takes out another short-term high is our validation for going long for the dollar index, and we'll go short for the GBP and also for the euro if it goes aligned with it, with their individual price action. So I know that I've really explained so many things and not everyone might understand fully. All these concepts are being taught in the academy. So if you have any questions, you can drop it on the WhatsApp group. I will respond to them anytime now. So I believe we have all gained knowledge here, and I will see you in the next live trading session. So if you have any questions, once again, you can drop